We're live. Hey guys, what's going on? It's the Sherpa here, bringing you an earnings call review. An earnings call that was important to me. I listened to it twice, once last night, once today. As you all know, Uwmc reported earnings yesterday. That's United Wholesale Mortgage Corporation. For the sake of this call that I'm going to review here, give you my take on the stock, tell you how to do it. I do want to mention that they just call it UWM. It's United Wholesale Mortgage Corporation. You all know that. This has been on the Sherpa's list for about, 3 months, 4 months. By the way, the Sherpa's list is available at everbullish.com. It's right behind me. It ain't a pretty day, here to tell you. But it's Turnaround Tuesday. It's Institutional Tuesday, Trade Tuesday, Torrent Tuesday, Tidal Wave Tuesday. The best time to trade is actually kind of when I'm making this. I've got some limits in right now. And I'm thinking about going shorty. It depends. We'll see where the market goes. That's the beauty of being a trader, not being tied to one investment strategy, and for following the Sherpa. Okay, let's do it. Let's get to the top of the mountain. Let's talk about it. I will upload this PDF to my website, everbullish.com. I'll attach the video. I just got to pretty it up for you. The most important thing for me was to get this out as soon as I could, so you'll be more informed. And tell me if your broker's doing that, huh? All you brokers watching me, I see you. So share screen. Let's do entire screen. Let's say share. Let's go down. Bear with me. All right. Cool. Okay. The earnings call. First of all, the CEO wasn't there. I didn't like that. They said personal problems. Look, I'm the first one to admit that there are personal problems that will come up and cause you to miss work. Shout out Fidelity. What's up? I didn't like that he's not there. This is supposedly the #1 volume-based mortgage company in the United States. This is an important call. It's a SPAC that came out at $10. Now it's at 7 something. Don't love that. The COO did a great job with flowery language at the very beginning, which I like. I can take flowery language. I don't know why I'm having a hard time saying that. Let's just say he sold the sizzle. How about that? He sold the sizzles. So company profile, if you're not familiar, Uwmc Holdings Corporation, residential mortgage lending business. Think Rocket Mortgage without the overhead. They try to appeal themselves instead of directly to investors. They try to appeal themselves more to independent brokers. So they're selling to the people that are selling. Think about it like that. I like that model. It's supposedly it's going to be a lot cheaper in the long run. You don't have to pay Ricky Fowler to do commercials for you. You don't have to staff as many people to do outbound calls, kind of all of that. They're based in Pontiac, Michigan. They started in 1986. There's your fun fact. Now you know that. You know more than you knew before. On this earnings call, I'm going to skip some of the financials. Just know that they missed earnings. The expectation was 8 cents. They only missed EPS, earnings per share, by 1 penny. But that's not the point here. The stock has sold off over the last 2 days since then. You can look at the financials. You can pull them up anywhere. Here are some of the things that I took away. This is how I listen to calls. I suggest you do the same thing. Again, I make these presentations and I spend time on them, and I make these videos because it helps me as a trader. I figure I'll give it to you too. If you appreciate it, you know what to do on everbullish.com. Cup of coffee for sale. Buy me one. So, takeaways. So the COO comes out and the first thing he says, $52 billion in new loans this year. Those are purchases. He didn't say anything about refis. Why is that? Rates went down. Refis were kind of non-existent. Over the last quarter, they kind of went back up. So we just had this ping pong effect, and they obviously weren't focusing on refis. So $52 billion sounds like so much money. You're like, how are these guys losing cash, especially with the lack of overhead? How come they're not making any money? How come their stock has been sold and even shorted recently? That's my question too, and it wasn't exactly answered. But I will say this: $138.7 million in net income, and then what he calls $358 million in core earnings. Again, this is him selling the sizzle. That means nothing. That's not even a true accounting term. So I'm okay with that. Here's a picture of the chart. It's selling off. At some point, it's going to be a buy, and I'll tell you when. So again, that was all fluff. These numbers were fluff. Billions, 500 million, 350 million, 150 million. I call it core. This is what's important to me. You didn't tell us why you lost money, bro, and you kind of danced around it. I didn't love that. Mentioned it. Okay, so he actually said this 4 times. I'm going to put this on here. This guy said that this, for 4 times. He mentioned that they are the elite mortgage company in the United States. I don't agree with that. Most people wouldn't know who they are. Most people aren't the ones that are always, obviously, the indication of what's good or bad. You can ask a company like Chubb Corporation or other companies out there that are complete stellar, just crushing it in their industry, and no one knows about it because of the way they wholesale as well. This company's not that yet, and it's indicative on that chart I just showed you, right? I don't think that's the chart of the most elite mortgage company in the United States. But I like that he sold it. I like the COO. He's cool. He mentioned the refi mix declined, the purchase mix went up. It was surprising that happened, so that they're getting more purchases than refis when the interest rates kind of went like this, just a tiny bit of the pop at the end. And this wasn't done through slowing the refi business. He said that, which makes sense, right? Denominator, numerator. If you lower the number at the bottom, the number on the top gets bigger, right? So he said that most of the other mortgage companies, and he directly called out his competitors. I like this. He pulled out the daggers. He called out his competitors, and he said other competitors will lower the amount of refi mix that they do just to price up their overall ratio on purchase mix over refis. I don't know that much about that, but I like that he called out the competitors. Here's what I didn't like, and I'm going to be real staunch on this one. I'm very, 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 very good and in tune at understanding the macros behind interest rates. This dude said with the average rate being somewhere, I think it was around 2.9, the weighted average rate on their loans, 2.97, I want to say, if I'm being correct here, something like that. And he said, well, when rates are at 4, we're going to be great. This is with rates low. Well, when you keep telling your investors that we're going to hit interest rates at 4% on the average, weighted average for mortgages out there, I haven't find that hard to believe. I don't know that you know how difficult that is to actually do. If you understand the economics behind it, interest rates are very difficult to move in the short and long term, particularly with the Fed being so accommodating, particularly with the housing bubble, if you will, going right through the roof. We're hitting all-time highs. The only good thing about the pandemic for me was that my house went up in value, for example. And I think I'm indicative of a lot of investors out there, a lot of traders out there, a lot of, homeowners out there. So saying that they're going to hit 4% and then they'll shine is that's for the dumb investors. That's for the Reddit community and some of the other folks that are just listening to this call and looking for anything good. He also mentioned they're targeting $100 billion worth of purchases of new business purchases. Purchase business rather, meaning that they did $52 billion this year, which was the first thing he said on the call. They can make that 100. They're doubling their, spread out revenue sources, so to speak. And that doesn't cost them, an extra cost per good. That doesn't affect their marginal cost per good because the infrastructure is already there, right? So I like that. That just seemed kind of like he was going, all right, we could do 100 this year. Shoot, I'll do 150. No, make it 200. It didn't sound like it was very well forecasted, but I'll take it. He did mention, I finally heard it. I finally heard what Uwmc's competitive edge is, and it's that time kills deals. He said this. I really like it. I'm going to keep that in my vocabulary going forward, but time kills deals. 18 days to close, 47 days is the industry average. So they close quickly. Homes are getting snatched up all over the country, especially down here in Texas. I am here to tell you that. So I like that part. I thought that was great. He also said that he addressed their competitors. He called them right out. He said Rocket Mortgage he just basically said what they do. He kind of spoke to them as enemies. He trashed them a bit, and I like that. He's playing dirty. He's not too dirty. He didn't acknowledge that they're absolutely murdering him in market price or share price. But, I don't think anybody has to just put them both on a chart. Again, it's the independent mortgage broker channel that they've created. He used a lot of flowery language around, fluffy language around their new technology, but then he didn't really say anything. But he's like, we have a technological advantage here, a technological advantage there. But he didn't really say what it was. All he said was that, and I'm going to get to this, He said that they have a training that they're paying for to send independent brokers for an intensive training in Pontiac, Michigan, at their headquarters. So I like that. That's standard for wholesaling of any business, including mutual funds, by the way. Shout out mutual fund salesmen out there that don't make their clients any money. Here we are. Pontiac, Michigan, they have a training for independent brokers. $8 million in documentation tech. Okay, dude, you're talking about having $100 billion worth of new business, and you're fluffing the fact that you spent $8 million in new technology to get documents signed. Marginally, that's so little. I don't even know why you brought that up. You did a bad job of explaining the tech edge over your competitors. You just said that y'all have document technology. And I get that that's important, but come on, give me something. He did talk crypto. This is a dog whistle. This is a red herring, if you will. This is what any CEO, and I don't blame him. I would do it too. But this is back to the dumb money thing. He says we're looking into it. We're looking into the usability of crypto. How do you mean? How do you mean? Cryptocurrency for what? Closing payments? It's not going to happen. Using crypto for mortgage payments for customers to pay their mortgage. Okay, I doubt it. He's just using the word crypto because crypto just went on a run over the last couple of weeks. This is very similar to a couple of years back when companies were just adding the word blockchain or crypto to the end of their ticker symbol or the end of their actual company profile name so that dumb investors would just buy it thinking it's a blockchain company. That's actually what Riot did, if anybody knows the true history there. They were a biotech company that switched to crypto when the crypto boom took off. But anyway, back to this. Crypto thing didn't do anything for me, but at least our COO is trying to pump the stock. He also got flustered when he started talking about when he started to wrap up the call. And when you're listening to calls, you'll notice that all the bad news comes at the end. Check the way that the information is delivered. What he said was that they got approval to do a stock buyback and they have enough money to do it. He started talking very fast and throwing out a whole bunch of numbers. Again, you can find those numbers somewhere else, but he gave less reasons. He gave a whole bunch of reasons supporting some of his bad information at the beginning. When it came to the proof being in the pudding, it wasn't really there, in my opinion. I didn't even like the way that he discussed the buyback. He did announce that the dividend is approved. You can see what I wrote here. I didn't mean to put that on here because I just copied from my notes, but it is what it is. He said that the weighted average note interest rate is 2.97%. We'll see that go down as people refinance elsewhere, right? They're going to get rid of their high notes. That number is going to go down. I think that's something that he didn't want to discuss. Again, the dividend gets approved. I don't think dividend-paying stocks are very well valued right now. I think they still cost too much. But I do believe that when rates go up, that's going to slow down the growth aspect of the market. That's going to rotate back to dividends and back to value investing, particularly in the event that we get a spike, which I don't foresee. But if we do, that will help. But right now, it just doesn't. Who cares about a 5% dividend when I can make 5% in a day in a select fund, right? Here's the part another part that I did not like. It's got a countrywide feel to it. Anybody from the Dallas area, Fort Worth area, anybody that bought a home between 2007 and 2011 knows exactly who Countrywide is. It was a lot of we're going to do this when blank happens, particularly with what he said about rates being at 4%. When rates are at 4%, when the average rate's at 4%, when mortgage rates are at 4%, the assumption that that's going to happen quickly or even in the next year or 2 years or 3 years, none of that is guaranteed. Look at Japan. Look at what we've been going through. I remember every real estate friend of mine that doesn't know anything about investing kept telling me that it's time to buy. It's time to buy. Well, yeah, you're selling the house, but I know how rates work. And if that's the case, I'm just going to buy a floating rate and keep refining if I have to. So anyway, the point here is that it was a countrywide feel. It was that kind of the Big Short feel. It sounded ugly. It sounded like he was also winding it down and trying to avoid addressing the elephant in the room. The closing statements that he made about how profitable and how they were doing, and he again mentioned, this was the fourth time he mentioned that they were elite. They were the elite mortgage company. I know that that's what he wants mortgage brokers to think. And I have no qualms or disagreements that they may, by volume, be in the best space they could possibly be in as a wholesaler. And I like that aspect of it. There's something not connecting between what their earnings are, what their revenues are, and they mentioned their profit margins are somewhere. What is that? If you just do the math in your head, it'd be somewhere around 3.5 to 4%. I don't know why that you can't report earnings in this case. Again, you can better earnings in this case, and even why the expectations were as high as they were. This was an ugly call. There were some bright points. Again, I like the COO, but what he basically, what my takeaway is, and what the Sherpa thinks about this is, look, here's the thing. I've been trading this. I'm not going to trade this anymore. I'm going to buy long-term shares. I already own a couple. No options. I'll buy warrants if the price continues to drop, let's say below 650. Let me pull it up real quick and see what it is today. Right as I'm making this, UWMC. Yeah, so it's at 711. I like it at 650. So I'm not going to buy any more. I'm going to put buy limit orders at $6.50. If it goes below that, then I'll start dipping my toe in the warrants and the options. It's a long-term hold, but it's not going to happen fast. I was wrong on this one when it came to the video I made maybe 2 months ago about UWMC. I was disappointed in this call. Most importantly, I was just disappointed in the way the market reacted to it as well. If there was a little bit better news about this, I'd probably have been a little bit more maybe psychologically in tune with what was going on, with what the COO was trying to tell us. Straight up, he didn't. It was an ugly call. A lot of dog whistling, a lot of gaslighting, a lot of gassing up how great they are without showing us how great they are. The loans are there. It's going to take rates to pop for this company to overtake Rocket Mortgage. And quite frankly, there's no reason they shouldn't have made more money, or at least shown something that they could make more money. And this is all about their forecasting on how mortgage rates will be in the future. And I'm here to tell you, they're not going to go up very fast. You can take that to the bank and cash it. I'm the Sherpa. Let's get back to the video and make sure that that was all recording. All right. I hope it was. We're going to get rid of that. All righty. What else, guys? I'm in Lab U. If it goes down anymore, I might just sell those options. I'm considering shorty. It's an ugly day in the market today, but I'm not going to pull the trigger too fast. It's turnaround Tuesday. Just while we've been talking, look in the background here. What's happened? ERX up. Wow, I'll be darned. Give me Lab U, baby. Give me Lab U. Where you at? Where you at? Ethereum's flat. It was down 4% earlier today. FTCV, one of my babies, is up. Shorty was up 4. Now it's only up 2. That's the short side of the small caps. That's what I use, as you all know, as an indication of where things are and where things are to go. LabU's floating at around 1% down. Now it's at 2.5% up. See, it's turning right now as we speak. I couldn't have timed this better. That's the Sherpa. That's the ever bullish advantage. Go buy me a cup of coffee. Go buy one of my portfolios if you want to beat the market very easily. Fire your manager. Stop fooling around. If you have a 401k account with Fidelity that has over 100 options or brokerage links, you can use my money back guarantee Fidelity 5-fund portfolio. You buy 5 funds. You only change 1 in a year at the most. And I will email you if you need to. Otherwise, you just beat the market. And if you don't, I give you your money back. Go to everbullish.com and check that out. Otherwise, follow my trades. Keep winning. Follow the newsletter. It's free. Join it. If you show some love to the Sherpa, you always get my personal cell phone number, my personal text message. This is my life. This is what I do. This is what I love. It's good to make friends. It's better to make friends money. Sherpa, AFG, LFG, LGR. Let's get rich. Let's go.